Hey, welcome back to The Dive. Dr. John-Mark Staude, President, CEO, and Director of Riverside Resources, is back to give us an update about the company, copper supply and demand, gold, and his thoughts on the Federal Reserve's inflation stance. But before we begin, quick reminder to tap on that subscribe button for me, please. Hey, John-Mark, welcome back to The Dive.
Great to be on the show, Cassandra. Thank you.
Yeah, thank you for coming back. All right, so let's begin here. How do you see commodity prices and the overall economy linked? From the large macro USA perspective, the Federal Reserve is tapering bond buying and looking to raise interest rates. How do you see this impacting prices in commodities?
Yeah, it is incredible. I think that as we see the tapering, we definitely see inflation coming on. And I think we definitely see commodities being in great demand. I think we see actually resurgence in lots of construction, seeing a resurgence in a lot of development, and particularly we're seeing commodities getting squeezed to the upside. The reason the upside is that so many different things need those commodities, and it's so hard to get them that we're definitely seeing prices going up as the scarcity is beginning to take on.
What's your view of the growth?
I'm really optimistic at a global scale as I've traveled around. Today, I'm in Whistler, British Columbia. Last week, I was in Colorado. The week before, I was in Germany. Before that, I was in Switzerland. And I'm really impressed how things are rebounding from COVID. It's been such a difficult time. And I think the one thing we don't realize is the commodities are so needed and it's been so hard. The supply chains have been impacted. So we're definitely seeing a bullishness in the prices in the short term and the medium term, as it's been such a long time to get new projects developed. And now really important is we want them to reignite the growth that we see as possible.
So overall, which commodities are you the most bullish about and why?
I'm really bullish on copper. I really think that the electrification, I know some people are having trouble keeping electricity in their homes these days due to power outages and other challenges, and overall, the real need for that growth. Secondly, I really am bullish on gold and precious metals. I think we really see that that is a store of wealth. I think with so much inflation happening, with so much new creation of debt, as we try to get through this COVID series worldwide, we definitely see those are some of the commodities, as well as the battery metals. Such a long push for those. And I really think that that's hard to see supply, true supply, making it to market. There's so much speculation, but to get truly those metals to market is quite a pinch happening now.
So how are you preparing or taking action given this view?
I've been taking it in three ways. One is actually personally investing, going to mineral conferences and researching, looking for great assets, particularly emerging exploration companies that are beginning to get the assets forward. They're so undervalued. Secondly, is looking for production, producers that are actually able to produce those, such a value. And the third is looking at jurisdictions, certain countries that are actually most favorable. Canada, particularly North America, is a really strong. Mexico, places that we know we can develop these resources, because I think it'll take time in many other jurisdictions and the supply chains are so hard. So jurisdictional, looking for those early discoveries and looking for the producers are three things I'm doing right now.
So longer term, as there's been so much government creation of paper money, what do you see in the next 12 to 24 months as the effect and why?
Oh my goodness, I cannot believe how much new debt, how much new has been created. And I think the inflation is incredible. We're finding it so difficult to find new employees that want to work. We're seeing that the government's been giving out capital and money to people so people don't go. I don't know if you've actually tried to go to a restaurant and get service these days. It's really hard. And you travel around. And so I really think that what we see is that with that, the commodities are a fix of value. That we will see greater consumption. We will see the expansion, people leaving the cities, moving to the countryside and wishing to develop those new houses, the new infrastructure. All of that takes copper, all kinds of different other commodities. And so we definitely see that it's a real push for that. So the up and emerging producers and production companies have incredible value, and it's undervalued. Right now, people are not paying attention to those production. They're going for the high-tech stocks, the FANG stocks, things like that. And I'm very bullish about the commodities and think that mining has a real revenge happening right now. Revenge of the miners.
I like it. Okay, so you mentioned the debt levels. Tell us more about how that will impact the mining industry.
It's incredible the amount of debt that countries have been taking on. They've been trying to bail themselves out through the creation of paper money. What's going to happen to the mining companies is they're creating true materials in the ground, mining, getting them out. You either have to mine it or farm it. There's no other way to create resources and get resources to market. So I really see that with all these high debt levels, the valuation of hard, real assets like mines and the production to really be valuable and not something you can just create paper-wise. So they're undervalued right now. And as we see a readjustment for those high debt levels needing to go into hard assets, the commodities and mining companies really become a key place to be.
So let's talk a little bit more about the pandemic. In your estimation, what will a post-pandemic world look like?
I'm optimistic that we go back to greatness. I definitely see there's so much hybrid. I see there's so much virtual. I see that people are now working from home. I think that we were going in that direction. And I believe that the COVID pandemic has accelerated things maybe as much as a decade toward a trend that was people not having to go to cities, people being able to use tools, be able to use Zoom and other softwares. And I think that more and more technology. But mining, you can't do that way. Mining, you have to go out in the field. Mining is not something you can do at the desk. So I think in the post-pandemic world, mines are much more valuable because we begin to appreciate that some things you can't replace. You could definitely do an office job from home, but you can't do a mining job from home. So I really see in the post-pandemic world, the resources, people that can get in the field, companies that have the proficiency to develop mines and develop exploration as hugely valuable in the post-pandemic world.
Yeah, it makes a lot of sense to me. Okay, so let's talk about the climate story. What metals make us green, and how do they and the mining industry fit in?
It really is so important. And we see what Biden is doing with the new $3 trillion package coming out for this new year in the United States, that the green metals, particularly copper, nickel, batteries, even uranium in terms of giving us electricity, but particularly those metals that are fit for wires, fit for infrastructure. Those are the things that we really need. And those are the green metals. And so as we do this, and if we put up the capital, all this bailout cash, if it's put into developing true infrastructure, then those green metals, such as copper and nickel, et cetera, are really going to be valuable and demand. And we really have a chance in the United States, in Canada, and North America to be a major producer of those. Otherwise, they'll be produced from Africa, shipped over here as finished product, and then put up. Either way, we'll see a real use in development of those mines, and particularly we'll see that the consumption of those metals will cause a push for supply, greater supply, a need for supply, because the demand is there.
Okay, well, that's all the time we have for today, John-Mark. Thank you so much for joining us again and sharing your thoughts with us.
Great to be on the deep dive, and you guys do a great work. Really pleasure. Thank you.
Thanks. Thanks so much for tuning in. We'll be back again tomorrow with more great content, so stay tuned by hitting that notification bell.